Good afternoon and welcome to another session of Jesop's Live. My name is Dinah Soglu. I'm the head of investment monitoring at Jesop's. We do well to come to you once a month on the third Friday of every month to bring you pertinent issues that are relevant to members. Last month, our session dealt on understanding your statement. If you missed out on that session, you can click on the link tree that is displayed on the screen to have access to our social media platforms in the GSOP's website. If you have any questions during the session, you can type them in the comment section and we will do well to answer your questions. Please share the link with your colleagues so that they can also join the session. Please do well to follow us on all other social media platforms. Today, our discussion is going to be on allowable asset classes. Allowable asset classes. One would ask, what is allowable asset classes? Allowable asset classes are those areas where we can place investment vehicles within which we can place investments. The National Pensions Regulatory Authority is the regulatory body for GSOPs. All our investments and our activities are regulated by the NPRA. Pursuant to Section 176 of Act 766, pension funds in Ghana may be invested in any of the following asset classes: Government of Ghana securities, local government and statutory agency securities, corporate debt securities, bank securities, equities, collective investment securities, and alternative investments. Please share the link with your colleagues so that they can join the session. Also do well to follow us on all our other social media platforms. If you have any questions whatsoever, it could be on any subject matter, you can call in on our phone numbers for our able-bodied team to assist you. Our phone number is 059 692 1135. You can also have access to our other social media platforms and accounts in the GSOP's website by clicking on the link tree that is showing on the screen. We will be discussing the various asset classes, allowable asset classes, as have been listed. I'll list them again. Pursuant to Section 176 of Act 766, pension funds may be invested in the following areas: Government of Ghana securities, local government and statutory agencies securities, corporate debt securities, bank securities, equities, collective investment securities, and alternative investments. Most of these Most of these investment classes fall have two main features. They are either fixed income or equities. What is a fixed income investment? A fixed income investment refers to an investment in which an investor lends money to a borrower that requires fixed payments to the investor in the form of interest. It is called fixed income because the interest is fixed at the beginning of the investment period. So, right from the onset of the investment, you know how much interest you are going to receive at a specific time in the future. Most of the allowable asset classes have this feature of fixed income. Some examples are the government of Ghana securities, the local government securities, corporate debt, and then the bank securities. These are investments that at the beginning of the investment term, for example, a bank security, let's say a 91-day fixed deposit with GCB, for example. At the beginning of the investment, you know that your investment is going to last 91 days. So the term is fixed. Um, you know, for example, that it will be at an interest rate of 20%. So you know that on the 91st day of your investment, you are going to receive 20% on the amount that you have invested. And this is why it is called fixed income. Most of the asset classes have these features. So for the local government agencies, the corporate debts, whatever amount you invest right at the beginning, you know that at this specific time in the future, this is what you are going to receive and at this rate. That is why they are called the fixed income investment. Please share the link with your colleagues so that they can join this discussion. If after the live session you still have any questions or you have any questions not related to the subject being discussed, you can still post them. You can still ask those questions by posting them in the comment section and we'll do well to answer them. Please click on the link tree that is being displayed on the screen so that you can have access to all our social media accounts, the GSOP's website, and our contact numbers. If you have any queries, questions, you can always contact us directly, and our team will help you to resolve your problems. So, to describe the equities, an equity investment refers to an investment where the investor purchases shares in a company with the expectation that the shares would rise in value in the form of capital appreciation and generate dividends. Now, what happens with an equity investment is that the shares that you have would either increase or decrease in value based on the performance of the company. When the company does well, it translates into the value of the shares, and the shares either goes up or come down. However, these gains or losses are not realized immediately. They can only be crystallized, or they can be realized when you sell your shares. So when the shares go up, the value of the shares go up and you sell them, then you get more money in your account than what you bought those shares for. However, most companies on an annual basis would pay dividends. And this is also reflected in how the company performs. When the company performs well and they make a lot of profits, they are able to declare dividends, but this is subject to the board's approval. And dividends are paid to members who own shares within that company. Some examples of shares in Ghana are the MTN shares, for example, Total shares, Fan Milk, Benzo Oil Palm shares, GCB shares, just to name a few. Just to name a few. If you have any questions relating to the subject being discussed or any other question whatsoever, you can type them in the comment section and we'll do well to answer them. Please share the link with your colleagues so that they can also join the session. Do well to follow us on all our social media platforms. So now we would like to discuss some of the features of the fixed income. One would ask, how do I know if this investment is fixed income or if this one is an equity investment? So I'll do a comparison between the fixed income and then the equities investment. Fixed income has a fixed term. For example, assuming you buy a 91-day fixed deposit with GCB Bank, this is just an example. Right from the onset of the investment, you know that it's a 91-day fixed deposit. So after 91 days, your investment has ended. For equities investment, when you buy a stake into a company, you are going to hold it indefinitely or until you wish to let go of your stake within that company. So at the start of the investment of an equities investment, the term is not defined. You do not know how long the investment is going to last. You can hold it forever. Another feature is the fixed and guarantee. Another feature is fixed and guaranteed interest for fixed income, while equities have volatile capital gains and dividends. As earlier mentioned, right at the beginning of the investment of a fixed income investment, you know that you are going to receive 20% on your investment or 30% on your investment, and that is fixed. It is determined right at the beginning of the investment period, and it is guaranteed. It is not going to change. You know in advance that on that specific day in the future, you are going to receive 30% on your principal invested. However, for equities investments, the capital gains are volatile. This is determined by how the company performs. And nobody can know how the company will perform. You can just have a hope that this company is going to do well, and that is why you will buy into it. However, there is no guarantee. There is no guarantee how the company is going to perform. And even if the company performs well, payment of dividend is subject to board approval. Another feature that distinguishes both kinds of investments is that the risk is borne by the borrower in the fixed income investment, while for the equities investment, the investor bears the risk. What does this mean? What this means is that when you have an investment, a fixed income investment, the terms of the investment are determined in advance. No matter what happens within the company, you are still entitled to receive your interest at a specific time in the future. But for an equities investment, anything that happens within the economy could change the dynamics of what your hopes and your expectations are. If the economy goes bad, the risk is on you. You will not get what you were expecting to receive. If things go well, then you are on the positive end of the event. So you would have less risk in there and you receive more returns. Please type your questions in the comment section and we'll do well to answer your questions. Please share the link with your colleagues so that they can also join the session. do well to follow all our social media platforms by clicking on the link tree on the screen. Another feature that another feature that the fixed income have is that it is issued by companies and government, while equities are issued by only companies. Government of Ghana is able to issue fixed income investments. The 91-day treasury bills that we buy are issued by government. 182-day, 3-year bonds, 5-year bonds. They are all fixed income investments and they are issued by government. Corporate institutions are also able to do same. Banks offer 91-day bills, 91-day fixed deposits. Um, Private companies like Israel Loans, Bayport Financial Services also issue fixed income investments and people buy them. However, for equity investments, they are only issued by companies. Governments, no one can buy stake in the government. It's not something that is done. It's companies that issue shares. So you buy a stake in a company, and then when the company is run and it grows, you receive your your dividends and your capital gains. Finally, we talk about liquidity. What is liquidity? Liquidity is the feature that is shared by both fixed income and equity investments. Liquidity is the ability to convert an investment into cash. So, for example, you have a fixed deposit and you need money urgently. You can talk to your issuers. Some of them would fine you a small penalty, but then you're able to get your money back. In terms of government bonds, when you need some money, you can sell your bonds on the secondary market in exchange for money, and then you let go of your investment. The same applies with equity investments. When you need cash, you can sell your stake within the company in exchange for cash. Somebody will give you money and then you sell your stake within the company to them. So both assets are liquid. You can easily exchange them for cash. Here are GESOPs. The board promises to provide regular updates to members. It is for this reason that when you are able to access our website, you would be able to see the asset allocation that is used to invest your funds. So when you're able to access the GSOP's website, you would see that the current asset allocation as at the end of April is as follows. Government of Ghana securities 68.2%, local government 11%, corporate debt securities 9%, bank securities 4%, equities 1.5%, CIS 0.2%. We are committed to providing you with all the information that you need so that you know everything that is going on concerning your funds. Now, with the asset allocation, the regulator, which is NPRA, has given a maximum allocation above which we cannot place investments. For example, for bank securities, we are not allowed to place more than 20% of all the funds within that asset class. All the asset classes have maximum allocations that have been given by the Pensions Regulatory Authority, which we need to stick by to make sure that we are compliant to NPRA. Please share the link with your colleagues so that they can join the session. Please do well to follow us on all other social media platforms. You can get in touch with us directly by sending us a WhatsApp message, and we will respond to this message within 24 hours. Our WhatsApp line is 0271 900 977. 0271 900 977. Or you can also call us on 059 692 1135. I repeat, our phone number is 059 692 1135. If you missed any of our previous sessions, you can click on the link tree that is displayed on the screen to have access to our other social media accounts, the GSOP's website, and our contact numbers. Please share the link with your colleagues so that they are able to join. Even after the session, you can still click on the link to be able to watch the full session and all previous live sessions that we have recorded. So to reiterate, pursuant to Section 176 of Act 766, pension funds in Ghana may be invested in any of the following asset classes: Government of Ghana securities, local government and statutory agency securities, corporate debt securities, bank securities, equities, collective investment securities, and alternative investments. Government of Ghana security is any security that is issued by Government of Ghana. So they could be the 91-day T-bills, 182-day 364, the bonds, 2-year, 3-year, 5 years, 10 years, 15 years, 20 years bonds. Local government and statutory agency. Those are the SLS, the energy sector levy bonds, the cocoa bills. They fall under that asset class. Local government and statutory agency. Corporate debt securities. These are securities that are issued by corporate organizations. For example, Bayport Securities, Bayport Financial Services, Izwe Loans, Lechego, Dache Bond, which is issued by the Get Fund. They are all examples of corporate debt securities. Bank securities. So the fixed deposits that are offered by the banks fall under the bank securities. Equities. Examples of the equity securities are the MTN shares, GCB shares, Benso Oil Palm, Fan Milk Limited. Securities that can be bought or sold on the Ghana Stock Exchange. Those are the equities. External investments. As described by the National Pensions Regulatory Authority, NPRA, alternative investments could be real estate investment trusts, private equity investment, project finance, direct property investment, and external investments. External investments are just any investments that have any of the previous features, but then are domiciled outside the shores of Ghana. So any investment that is domiciled outside Ghana is considered an external investment, and we are allowed to purchase some of those for the portfolio. Collective investment schemes, for short CIS. Examples are the data bank EPAC, the mutual funds that we have within the market. Yes, these are examples of CIS. Please share our link with your colleagues so that they can also join this session. If you have any questions about permissible asset classes or allowable asset classes, please feel free to call our phone numbers so that we can explain more to you. You can also contact us via WhatsApp on our WhatsApp lines 0271 900 977. After the live session, you can still send in your questions via this link and we will do well to respond to them. Please click on the link tree that is displayed on the screen to have access to all our social media accounts, the GSOP's website, and our contacts. The GSOP's website has details of the allowable asset classes and how investments have been placed in the various asset classes. If you are able to access the GSOP's website, you would get the details of those. These are updated regularly so that they reflect exactly how investments are placed within the portfolio. If you have any questions concerning any of the any of the issues discussed, you can call our offices and we would assist you. The current asset allocation is on the GSOP's website. We currently have a 62% of the entire portfolio in Government of Ghana securities. We have 11% in the local government and statutory agency securities. We have 9% in corporate debt. We have 4% in bank securities. We have 1.5% in shares. And we have 0.2% in CIS. The rest of the funds are currently held as cash. This is to enable us honor benefit payments as they fall due. Benefit payments are in the form of death benefits, retirement benefits that are paid to members and their beneficiaries. Immediately we receive all documents that have been required of members. We do well to make sure that we pay members on time. So we keep enough cash to ensure that we are paying members their benefits due them. So to recap on what we have discussed today, we have allowable asset classes as prescribed by the NPRA. This can be found in Section 176 of Act 766. They are the Government of Ghana securities, local government and statutory agency securities, corporate debt securities, bank securities, equities, collective investment securities, and alternative investments. We also describe the features of all these asset classes. And we have also given you a summary of where these investments, we have also given a summary of what percentage of the portfolio is in the various asset classes. You can check them out by visiting the GSOP's website, that is gespensions.com.gh. Or you can click on the link tree that is being displayed on the screen to have access to all our social media accounts, the GSOP's website, and our contact numbers. Thank you for joining us today. Thank you for making time to be with us. If you missed this section, please, if you missed the session, please click on the link to watch it after the live session. Join us again, same time next month for another session. Have a wonderful day. The GSOP, a wonderful day.
For more enquiries, reach us on 059 692 1135 or visit our website at www.gespensions.com.gh.